Good afternoon, everybody, and further to our recent Landlord series with tax consequences. We are delighted to be joined today by Sam Dyer, a well-known portfolio landlord and property investor. Today, we're going to be talking about life as a landlord during COVID, the opportunities and challenges that landlords face, and looking forward to the future of the property, rental and investment market. So, Sam, I'd like to say thank you for joining me this afternoon, and I'm going to fire straight into my first question, if that's okay. Can we start by getting your view on the general state of the buy-to-let market in 2020?
Well, hi Mark, thanks for having me. Buy-to-let market in 2020, overall I think it's doing quite well. I think it's important to note that there are two sides to the buy-to-let market. The side that the media often focus on is the capital side, so you're buying and you're selling of the properties themselves. But the other side of it is obviously the rental side, and how the rent prices are doing, and sort of the supply and demand balance. So obviously, when there's financial instability, the capital market's often hit. So there's been a lot of uncertainty in sort of the capital side of the market at the moment. The rental market usually does fine through periods of instability. So what's actually happened this year, we've seen a lot of rents rising and sort of big spikes in demand, especially for properties with garden space, bigger properties of extra rooms, and family homes. There's definitely been a big spike in those types of properties.
That's great, Sam. So with COVID and the obvious impact that it's had on household income for many, has the availability of finance been affected? Has it been restricted? Is there more loopholes and hoops to jump through for any potential property investor?
Yes, unfortunately, the finance has been affected. I do believe it's a short-term thing, and it's not so much about the individuals, but it's more about the properties. So, for example, lenders, they're being more cautious. They're bringing in stricter criteria. So, the minimum property value that a lender will lend against, that they're increasing the values. Each lender sets their own criteria. So, generally, below 70,000 is when you go below 70,000, it gets tougher. Flats above commercial have always been difficult, even harder now. And importantly, capital raising. So, what do I mean by that? Two types of finance generally. You either got purchase finance, where you take out finance to be able to buy a property, or you have capital raising or remortgaging, where you take out additional borrowing on a property you already own. Now, capital raising is, there's a lot of lenders have stopped doing it. Now, what does this actually mean? With all the lenders that are restricting their lending, the lenders that are lending are extremely busy. And what I'm seeing firsthand in the marketplace is, lengthy delays with the time to get your finance.
That's great. That's good information. Thank you, Sam. So let's say a bit of positive spin on where the market is just now. Thank you for that. And let's say we've managed to secure the elusive finance to buy a property. What steps and what should a potential investor look for to make sure that one of the key things that they secure the best possible tenant for their property?
So, really good question. It's similar to the finance itself. It all starts with the property itself. So, when you go and buy a property, it's not just about, does it look good on paper? Is there a high yield? Can you get finance, and who's going to live there? I think they're two really important questions to answer. So, back to the finance thing, if you buy a property that fits the criteria of most lenders, you're going to up your chances. Similarly, we're renting out and retaining tenants. So, okay, you've bought the right property. What can you do? A good property manager. So, a good property manager will thoroughly reference your tenants and perform all the necessary checks. They've usually got procedures, professional procedures to follow through. And what you'll tend to find is a lot of chancellor tenants tend to be put off by going through, agencies. But it doesn't stop there. Throughout the tenancy, it's important. Your property manager's job is to keep communication with your tenants. They've got a duty of care, to look after the well-being of your tenants. And importantly, it's keeping your property well maintained. Keep your property well maintained, wind and watertight, etc., etc. Tenants are happy, the tenants stay. But unfortunately, there are things, some things are completely out of your control. At the end of the day, if the tenant's going to leave, the tenant's going to leave. But what I will say is, generally speaking, I think it goes without saying, a one-bedroom flat, in the centre of Dunfermline, it's, typical tenancy, 1 year, 2 years, or a three-bedroom terraced house, in a residential estate. It's not uncommon to see tenants that are there 5, 10 years or longer. So again, it does all start with the property itself.
Great, thank you, Sam. So on that point, looking towards the future, I'm going to ask if you can get your crystal ball out for a second, if you don't mind. What would you say is your predictions for 2021, hopefully post-COVID, for the buy-to-let sector? Do you see demand increasing in the sector, or will be too many barriers to put off potential investors?
Well, I hope it keeps increasing because I'm well invested in the market. But I think there will be a slowdown in the market in general, in the property market in general. I don't see a big crash happening. There's too much money being pumped into the economy, and the market itself. And I think people want it to do well. But that being said, I just don't know. But I hope it does okay. But what I will say is, there's up until 2020, the removal of mortgage interest tax relief for landlords that own properties in their personal names is fully phased in now. And I've been seeing a trend with landlords who own property in that way selling off. I think that's going to keep happening and it's going to increase. But at the same time, I'm seeing lots and lots of new investors entering the market. The vast majority of them are incorporating as limited companies. And there does seem to be a lot of new entrants, and the people that are already in the market, a lot of people are saying, well, you need to scale up or not bother. I think property investing is turned from an industry where you could own 1 or 2 properties on the side to you're either going to do it in scale or you're not going to do it at all. So I do think the market will keep growing, but most importantly, there really is a lack of rental stock across the whole of the UK. And so who's going to supply that? It's going to be property investors. And the statistics are also showing there's a big rise in families renting and long-term tenants renting. And that is obviously an attractive thing in itself. And finally, someone said to me a couple of months ago, COVID-19 has battered virtually every asset class out there. Your stocks, your shares, your funds, and your pensions, a lot of commercial property. And he says there's 2 things that are doing really well at the moment. One of them is gold, which not a lot of people understand, and the other one is residential property investment. So I think the sector, we're moving into times now that are going to be quite exciting for those that are in it.
Oh, thank you for that comprehensive outlook for 2021. I just want to thank you for your time this afternoon, Sam. I, for one, have enjoyed listening a bit more about the ins and outs of the property market as it is today and going forward, and I'm sure that would be echoed by our viewers. So the final thing is to say, if somebody is watching this, would like to go into property investment and they'd like to contact you, how would they go about doing that?
Yep, so I'm on all the major social media channels, but particularly Instagram, LinkedIn, and Facebook. You'll find me at Sam Dyer Investment. And if you'd like to obviously book in a consultancy call or chat to me, you'll just contact my office. It's 0141 295 0051 or contact@dyerandco.co.uk.
That's great, Sam. Again, thank you very much, and I hope that the viewers have found this informative as a continuation of the Thomson Cooper Landlord and Property Taxes series. Thank you.